this deal, it's a fantastic asset. It's a smaller market, but still with 120K people in the city. It's called San Angelo in Texas. 52 units, as you mentioned. The seller is selling the deal to us with the same price they paid in 2020. So we went back 4 years' time.
We saw a lot of low-hanging fruits here to really turn the property around with professional management. That's what we have done since April. When we took over, the property was 60% vacant. And now over the last 4 months, we have brought it up to 85, 90%.
Question, how many years were left on that loan?
7.
Oh, fantastic.
A long time.
Fantastic. And so you've already got it up to 85, even 90% in just a few months. So what did you do there to get that occupancy up?
We really got in.
Welcome to Multifamily Rockstar. So as you guys know, these are the episodes where we dive deep into our guests' deals and really give you some practical and actionable items and tasks and things you can do to really get started and do your first deal, especially if you're brand new to multifamily. And as always, I've got my co-host Mark Nagy with me here.
What's going on, Rod? I heard you're going on vacation tomorrow. Where are you going?
Yes, sir. Yes, sir. Going to Italy for almost 3 weeks. So really, really looking forward to it.
You earned it.
And so, yeah, well, yeah, I need it. Let me just tell you that.
Yeah.
So I've got Charles Zhu and Alekhya Mukherjee on with us today. They're Warriors, and we're going to talk about their first deal, which was a 52 unit, if I recall. Is that correct, Charles?
Yeah, that's correct. Exactly. Yeah.
Okay. Well, tell us how you came upon that deal, and then let's go through it.
Yeah, so this is our deal once we joined the Warrior programs. Just set the stage a little bit to all the audience. Okay. We joined Warrior in 2022 December, but then it took us a while. So the deal closed in April this year, April 2024. So that's good about a year and a half, right? So as you know, the deal flow is pretty dry these days in the last 12, 24 months. And then it really took us time to build our relationship with brokers and then be disciplined and then learn and the ins and outs, how to underwrite a deal, how to build a team, and how to be comfortable with this market. So it took us a while, but we are really happy about the results. And then now we're seeing, with the first deal closed, we're seeing more momentum as well. Alekhya will talk a lot more about the deal itself, but first and foremost, I want to say this is our first deal, but also we learned a lot. And then it's a long process for the first one, but we are very much hope, this gives us the momentum going into the future. Yeah, in terms of this deal, it's a fantastic asset. It's a smaller market, but still with 120K people in the city. It's called San Angelo in Texas. 52 units, as you mentioned. It's a value add deal, and then we are getting a very good base. Essentially, the seller is selling the deal to us with the same price they paid in 2020. So we went back 4 years' time, and we're assuming they're 3.48% loan. So it's a fantastic rate as well. So I would defer to Alekhya to talk about all the details of it. But that's the overall and then the background.
Mm-hmm.
Perfect. Yeah, as Charles mentioned, I think we were initially not looking at San Angelo, honestly, as a market. I'm based in Texas, but we were looking at kind of the primary markets like most other groups as well. But we this deal came across because I had started building relations with a couple of brokers in the market, and they brought it to me. And so we started exploring San Angelo as a market and then the property. And I think what is really attractive about the property and why we got interested is twofold. One is, as Charles mentioned, the zoomable loan was really attractive. And two, I think what we figured out as we started the conversation with the broker is the seller was really having some troubles with his, they were a syndication group as well. And so they were having some troubles with their LPs. And so the LPs were wanting to get out of the deal. And so he was kind of in a position where he was forced to sell. And he was basically, the property was being mismanaged. So they had very high vacancies, not taking care of the tenants, a lot of maintenance issues. And so we saw a lot of low-hanging fruits here to really turn the property around with professional management. And that's what we have done since April. When we took over, the property was 60% vacant. And now over the last 4 months, we have brought it up to 85, 90%.
You mean 60% occupied, and now it's 85,
sorry.
90. Got you. Okay. Question, how many years were left on that loan?
7. There's
fantastic.
A long time.
Fantastic.
Yes.
Yeah, that's
Exactly.
fantastic. And so you've already got it up to 85, even 90% in just a few months. So what did you do there to get that occupancy up? Talk about that.
We did two things. One is like we really got in a professional property management company who knows the market because they have other properties in the market. And two, we really focused on the tenants. And so any work orders, I think we have been kind of turning them around fairly quickly. So they are getting happy. There were 4 down units that we have rehabbed completely as well. And from a property amenity standpoint, they had a pool that was non-functional for 2 years. They had a laundry that was non-functional for 2 years. So we have brought all of those back online, and that has really generated like positive feedback from the tenants. And now they're actually recommending their friends and family to come and live at the property. So we have gotten a lot of like positive or good footfall from just tenants recommending others to come and rent with us.
You know, it's interesting. I'm actually dealing with that right now in a portfolio that I'm in with an ex-partner that ran it into the ground, and tons of pools down, laundries down. And I mean, it's such simple stuff. I mean, come on. So how much money did you raise for this deal, and how much of it was CapEx, noted for CapEx? By the way, guys, CapEx means these improvements, like these down units that they had, things like that, maybe repairs that aren't really expensible, the capital expenditures. So if you would speak to that, please.
Yeah, so we raised in total about 1.7 on the deal.
Okay.
And we had about $700K for CapEx, and that was interior as well as all the exterior stuff that we are planning to do.
Now, really quick, before we get into what you guys are doing on the deal to increase value and that whole plan, one thing I wanted to ask about was San Angelo in general. I know you said you weren't looking at that. Obviously, you look at a map, it's a little bit out there, but it is a town of, quick Google search, I see 100,000 people. So it's not tiny, but it's not a major metro. What, if anything, did you guys change in your underwriting and your evaluation process to feel comfortable of buying in a, let's call it a smaller town than, let's say, a Dallas, an Austin, a Houston, whatever? What did you change in the underwriting process?
Yeah, I can take the lead on this, and then Alekhya, you can add on anything I'm missing. I think we didn't. The short answer is we didn't. We didn't change any of our requirement. Right? It's the same, a similar requirement on the deal and the numbers, return projection, and then the all the DSCR projection, all those, and then also the exit cap rates. We want to.
Right. Let me interject for 1 second, Charles. Let me interject.
Yeah.
So you said DSCR, guys. If you don't know what that means, that's debt service coverage ratio. In our world, in the commercial real estate world, the banks look at the property's ability to service the debt. They're not looking at your personal debt to income. And so a typical debt service coverage ratio can be anywhere, well, it can be a negative number to, a positive number, but the average that a bank will want is to see is 1.25% as a minimum. So that means if a property's net income is $125,000 per year, and the debt is $100,000, that's a 1.25% debt service coverage ratio. So anyway, I'm sorry, I just wanted to explain that when you glossed over that acronym. Please continue, Charles.
Yeah, totally. Yeah, that's a really good call. So what I will tell you, Mark, is what's make us say yes or be interested in this market is a few things. One is it is not a super small town. You still have 100,000, 120,000 people. That's the one.
That's not a small town. That's not a small town.
Yeah. Not at all. And then another very important factor is if you look at it in the job there, it's a very strong job market, and it has multiple industry there. It has a very large university, Angelo State University. They have 1,600 employees and then more than 10,000 students enrolled. They have a major Air Force officer training facility there. It's a good Valor Air Force training facility. And then they have one of the largest healthcare network, Shano. It's called Shano Clinic there. And that's one of the major employee in town. Goodyear Tire, they have their global testing base there as well. So you have this nice, very diversified employment base. So that's where we really like this town, and not just because yeah.
I'm sorry. Sorry to interrupt. Let me interject something on that note. Okay.
Yeah.
Guys, one of the, and he's saying all the right things here, because one of the things you want to see is everything's based on jobs, guys. That is the most important factor when you're buying multifamily.
Exactly.
And you want to see employment industry diversity. No one horse towns. Okay. Because, even an Air Force or Army base, if that's the main employer and that's the big horse, if that horse gets sick or leaves town, you're in trouble. So it's very important that there's a lot of diversity. So, I can tell you really did your research, Charles, and that's really good. And, my minimum for a town typically is 80 to 100,000. So you're well above that with San Angelo. I've actually looked at assets there as well in that town. So I like that market. Okay.
Well, I'll mention real quick. I was a partner on a deal last year that we bought in a town of 20,000 people. And Charles, you said something. One of the things I liked that pushed me over the edge for that deal was a college. There was a small college there and a lot of jobs that got brought in. And I'm glad we did invest, because I think year one, we're going to make 13-14% cash on cash returns on that deal. Wow. So there can be a lot of opportunity in those smaller towns that maybe other people like a Rod or the bigger operators may not touch. So something to think about there.
Add to what you said, Mark, is we look all across Texas. That's kind of our primary market that we look at. And every time we offer on properties in Dallas, there's like 20 other offers that we are competing against. But when you go to some of these smaller markets, which are not so much in focus, but have probably a more steadier kind of growth in terms of population and job, and not the kind of spikes you see with some of the bigger markets with Dallas, you don't have that many people competing with you. But then two, I think it's easier kind of to figure out what the game plan is, because you have that runway in front of you as well to make your business plan work.
Okay. What are we going to do? What's the plan long term for this asset? Are there any other value add components to this? What do you anticipate to happen with rents? What were the going in rents, and where are they now, and where do you anticipate them to go?
Yeah, great question. So as I said, we have already started our value add kind of business plan. I think the three big components is, one, stabilizing the occupancy over the next 3 to 4 months. Two is the amenities. So we have already brought up the pool and the laundry. We are thinking of putting in a dog park, because a lot of the tenants we have seen have dogs or pets at the property, and currently there is no dog park for them. So I think we want to create that.
Now that's an easy, very inexpensive add-on, and you've got some land for it. You've got to have some land for it, level land, but you've got that. Great.
Exactly, to do that. And then I think we resurface the parking lot for the tenants and everything else. And then I think the other big play is unit rehabs for us. And so we are planning to turn over about 40% of the units with new resurface counters and everything else. And so the goal is for our year one, from a pro forma standpoint, we didn't assume any rent growth, because our pro forma assumed that we would just get the occupancy up. But I think what we have achieved over the last 4 months is already somewhere between $30 and $50 a unit kind of rent bumps. So which is already kind of taking us ahead of where we were from a pro forma standpoint. So
wow.
We are on track right now. So I think the goal is to keep that momentum going as we get into 2025.
Yeah.
That's fantastic.
Go ahead. Another thing in terms of revenue opportunity, we're looking at other income as well, right? Other than the rent itself, we are adapting where we are provide the tenants an opportunity or option to pay for the covered parking. And also we are charging pet fee, which is pretty standard, but the previous owner just didn't do. And also the laundry room, obviously we're charge a fee for that, but previously it's just not functioning. So we have a brand new equipment there, and then the tenants are very appreciate that, because this is the number one complaint from the tenants before. So by doing that, we are really just taking care of people in the right way, and then people are paying for that. So I think that's a really win-win for both of us.
Let me just share this with my listeners here. And so you're talking about you're getting upwards of $50 rent bumps, yes? Okay, if you take those $50 rent bumps and you cross them over 52 units and you annualize that number and you divide it by a 5 cap, that's a $624,000 increase in value. Okay, just so you're listening. This is why we love this business, guys, okay? And, let's say, you get a charge a $25 pet fee and half the people there take it. So 25 times, let's say 26 times 12. $7,800 annually divided by a 5 cap is $156,000 increase in values. Guys, this is why we love this business, okay? Because you can ramp the value exponentially by your efforts. So these little numbers add up in a big way. I give you an example. We've got a more of a B plus asset in San Antonio. I use this example. We painted numbers on the parking spaces and allowed people to pick their own parking space, and they could reserve their parking space right in front of their unit. And we had 100 people take it. It was $25 a month. That annualized was $30,000, and at a 4 cap, that was a $750,000 increase in value for some paint on the freaking parking lots. Okay, so again, that's why we love this business. So the next question I would want to ask is, you guys are a team. Who does what, and what are your individual superpowers? Are you both fairly the same, or is one more in one area or the other?
Yeah, that's a really good question. Between me and Alekhya, I'm based in San Francisco Bay Area, so I'm more focused on extending my network and then find more investors and then educate those investors about this asset class, how we do business, how we evaluate the deals, and then what is the benefits and what is the risk in this investment as well, right? And then Alekhya, being based in Texas, he is more on the building the relationship with brokers on the acquisition side, underwriting the deals, talking about brokers, lenders. So this is how we divide and conquer between me and Alekhya.
Probably the asset management as well for Alekhya, yes, since you're there. I mean, exactly. Yeah, I would guess your boots on the ground, as it were. Yeah,
which is why I think this partnership works really nicely, Rod, because we can cover most of the bases between the two of us. Me being on the front end with broker relations and underwriting, and Charles doing kind of the investor relations and kind of all the social media and marketing for us. So I think that has really worked out really well.
Yeah, sure. And guys, that's one of the huge benefits of the Warrior program is, we've got people everywhere. And so, chances are there's somebody in the market that you're in. Then this is why, my Warriors own somewhere between 200 and 220,000 units that we know of and most of them done between Warriors. And you had Warriors in on this deal, correct?
Yeah. Exactly.
Oh, yeah.
Exactly. All of them were like the whole team is Warriors, so that's why it was like really great to partner, because we could all leverage our skill sets, because we have a couple of partners who are really experienced in construction management, so they're kind of handling all the capex, and a couple of people who do all the capital raising, plus also the investor relations with Charles.
Yeah. By the way, guys, if you're considering possibly getting some guidance in this business so that you can experience the life you're wanting this year rather than later, or maybe you just thought you could be more effective if you had a real understanding of what goes on in this business, text the word crush to 72345 to see if the Warrior program might be able to help you overcome any challenges that you have. Again, text the word crush to 72345 to apply. And we'd love to help you accomplish what you want to accomplish, just like these gentlemen are doing. So
talk about some of those challenges. That time frame of getting up until Rod always mentions this, getting that first deal. It's always the hardest one. What were some of those challenges, struggles, mindset struggles that you guys went through until you got to that, final closing of that first deal?
We had,
go ahead, Alekhya.
I can share a couple, and then Charles jump in with yours as well. But like just getting started, I think, and I'll focus on the front end with brokers, right? Like just getting in front of brokers when you're new and with no doors behind you or no experience. You start small, and I think you just keep calling them, building your relations, like just so that they see you, they know you. So I think it took me a while to kind of start building those relations. So the first 6 months, as we were underwriting, I was providing very like direct and timely feedback, so they knew that we were serious buyers. And so over time, as that progressed, it kind of helped us build that rapport with a couple of brokers, and so they started now calling me back and saying like, I have this deal, like, are you interested in this property? So that was one. I think it's just like having that mindset of like it's a long game, so it's not like I start and 2 weeks later I have a deal that I can take down. So that was one. And for me, the other big one was really finding the right partners. And so, as I said, like, this is why I really appreciate being part of the Warrior Group. Is we could have done it potentially by ourselves, but I think just having that network and being able to reach out to people where we don't have the experience, or there's a question and I'm like, how much do I need to spend on a water heater? I can just call up somebody and who is doing that and say like, what should I factor in? And so just building those relations up front, I think, helped us quite a bit. So those were kind of the two big ones from my side.
One thing you said is, it's not a get rich quick thing. And just please know that, guys, it's not a get rich quick thing, but it is a become super freaking wealthy over time thing. So just keep that in mind. If somebody tells you, oh, get into this multifamily game because you can get rich fast. No, you can get acquisition fees, and you should get acquisition fees. And typically they're 3 to 5%. And, on a small $3 million deal, that's $150,000. So it's not pocket change, but again, it's not get rich quick. It's the money's in the end game.
Charles, you want to go as well?
Sure. Yeah. I think one of my biggest challenges is the mindset change again. So I'm still have my W-2 job, right? So before this, I was more of like an employee based, right? Go to 95, and then you do your work, right? You get rewarded. In this business, it's a very much entrepreneurship, right? So I think, again, echoing to what Alekhya was saying, being in the community with a lot of people like this really helped me to change my own mindset. So, okay, now I sort of have, I changed most of my internal identity to myself, right? So this is what we as an entrepreneurship, we want to do. We want to bring business and want to providing value to our investors. So now the change in my mind is very different from what I had before. So I think this change inside of myself, people can feel that. My investors can see that, and they trust you because now you're becoming a investor friendly, or you are becoming a seasoned investor or syndicator per se.
Yeah. Charles, continue with another question, and that's, give my listeners one action item that they could get focus on right away to get started. What's something that comes to mind when I ask that question? And then I'd like to ask you the same question, Alekhya.
Yeah, I was thinking really do some quote unquote soul searching to see what do you want to achieve in your life. You can ask that question today, right now, right? And then keep asking that. What kind of lifestyle you want? What are you trying to achieve? Who do you want to spend time with for how long? And then do you want to get to choose who do you want to spend time with, right? And then ask yourself, is your current job or current career get you there or not, right? Be honest to yourself, right? And then there's no wrong or right answer. Some people like your job, fantastic, great, right? And if you don't, think about how do you make a change to that, right? So you can ask that question, and then give yourself honest answer right now. I think this is something everyone should do.
Nice. Alekhya?
Yeah, I would add on to that, saying like, take action. Honestly, I speak to so many people who also have a W-2 and keep telling me, I want to get into this space. Really want to invest. And they're still having that same conversation with me a year down the road. So it's like, really take action and really get started. Like, it's, as you said, it's not rocket science, but start taking the small actions. Like, pick up the phone, call somebody, be it an investor or a broker, and just start the process.
Well, I think both of you guys are pretty analytical. And, as being analytical, most people that are analytical have to check off every single box before they make a move. And that's what happens as years go by. And I would just tell you, if you're listening, just realize that you're not going to see the whole path, but people have done it before you. You just, like Dr. Martin Luther King said, you take the first step, the next step will be revealed. You guys agree with that?
Absolutely.
Yeah.
Well, look, one of those excuses for not taking action has just been eliminated earlier this week. The people sitting on the sidelines, I'm going to wait for interest rate cuts and all this sort of stuff. The Fed just cut rates 50 basis points. Maybe you guys want to talk about what you're seeing in your local market, Texas. You don't have to talk about the United States, obviously, but with that happening, what are you guys seeing in the local market in Texas? Where are things going in terms of deal flow? What's happening? What are you guys feeling, being on the ground there as the rates are starting to shift here finally?
Yeah, I think what I'm expecting, it hasn't quite hit yet, but I think what I'm expecting is like more sellers kind of starting to think about putting their properties back on the market. I think what we saw over the last 2 years is properties coming on that were needing to be sold, let's put it that way, versus really, like, if they had the choice to hold on, I think they were trying to hold on unless they hit the pricing they were looking for. So what I'm hearing from the brokers is that they're expecting deal flow to pick up over the next 3 to 6 months as kind of this rate cycle. And the expectation is this is one of a few to follow, right? So I think that's the kind of the long-term view. And so I think what will help us is both from a financing as well as cap rate expectation standpoint. I think we'll see some movement there. But on the flip side, which is why I think we were particularly active now when there were less other groups looking at properties, is we are expecting others to come in the market as well. So we're expecting probably more competition as we are looking at similar properties with more buyers in the market.
At like a higher level, I think with interest rates dropping, I think some of the investment dollar will shift back to real estate and then commercial real estate, especially because if you look at CD rates or if you look at any other fixed income investment, the return has been pretty good in the last 24 months, but now very clearly the cycle changed. So I very much expect more money flowing to real estate and commercial real estate, especially.
That's actually a good point, right? That people are forgetting about. As the Fed funds rate comes down, that means the savings accounts are also go down.
Oh yeah, for sure. Already seeing it. So are you guys okay with listeners reaching out to you? And if so, how and where can they do that?
Yeah, they can always go to our website, which is www.investegcapital.com. EG stands for Evergreen. That's our company's name. We have some ebook there just to introduce ourselves, and also as someone who works for a high tech company, how do we think about investing in this domain as a syndication and a commercial real estate? We have some free resource for folks, and then if people are in WeChat, which is one of the platform in Asia. So they can also find me there. My name is Charles-US Invest there. And then Alekhya, you can chime in as yours as well.
Yeah, I think you hit it. Those are
okay. Fantastic. Well, I appreciate that, guys. Appreciate you guys coming on today and adding some value and sharing your deal. And, I'm excited to get you back on in a year. And I'm certain that number will probably be 10x. But thank you for coming on.
Thank you.
Absolutely great job.
Yeah, thank
you so much.
Good to see you guys.
All right.
Yeah.
All right. So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. But see, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.